Welcome to Byte-Sized Tech, where we blend casual conversations with insightful discussions on the latest in technology and gadgets.
Great to be here.
So today, we're kind of diving into a real tech smorgasbord. We're going to unpack some of the biggest things happening right now.
Yeah, definitely. We'll look at, where all this AI money is really going and what's actually happening with manufacturing, some interesting twists there.
Oh, yeah.
And you can't ignore some of the, let's say, bold claims from certain companies.
Bold is one word for it.
We'll also touch on how different places like the U.S. versus the EU are handling tech rules.
And ultimately connect it all back to, the gadgets we all use every day. What does it mean for you?
Exactly. Should be interesting.
Okay, let's jump right in then. The biggest headline feels like AI investment. It's not slowing down, is it? It's a boom.
Oh, absolutely not slowing down. It's a rapid, ongoing boom. Full speed ahead.
We saw that White House AI action plan, too, which sort of highlights the focus.
Definitely. And what's really striking is the capital expenditure, the CapEx increases.
Right, the actual money being spent on stuff.
Exactly, stuff, big stuff. Take Google. They just raised their total CapEx forecast from $75 billion up to $85 billion.
Wow, $10 billion more.
$10 billion. And get this, it's specifically for Google Cloud, their enterprise business.
Not even their massive ad business?
Nope, it's cloud infrastructure build-out. And then you hear Mark Zuckerberg at Meta talking about potentially hundreds of billions in CapEx over time.
Hundreds of billions. That's staggering. What about Microsoft and Amazon?
Both on what they call an acceleration path. Building out infrastructure like crazy, demand for hyperscale is accelerating.
So everyone needs more cloud power.
Pretty much. Microsoft's looking at like mid 30% growth for Azure infrastructure. Amazon's cloud backlog grew 20%.
20%, wasn't it lower?
Yeah, up from 14%. So a significant jump. Shows the demand is real.
Okay, so if it's not ads, not directly consumer apps yet, what is this infrastructure focus? Like, what are they actually building?
It's the fundamentals, the dirt, the energy, the power lines, the actual core servers, the really foundational layer.
Gotcha. The plumbing, basically.
Exactly. The AI trade, as they say, it hasn't really hit the applications layer in a big monetization way yet. Companies like Salesforce or Adobe, they aren't fully cashing in on this specific boom yet.
So the software on top still needs to catch up to the hardware build-out.
Right. AI needs to move up that stack through the application layer to really, work broadly and make money beyond just renting out servers.
But this boom, it feels different, more real.
It does feel real, tangible, not fake like some other tech trends we've maybe seen in the past. The investment is massive and physical.
Okay, so with all this cash pouring into these AI-first companies, what does that mean for the market? Does it just get bigger or?
Yeah. Well, the next logical step people are talking about is consolidation.
M&A, mergers and acquisitions.
Exactly. Predictions of a massive consolidation, a big M&A wave, kind of like we saw with the internet boom or the cloud boom before.
Makes sense.
And honestly, long term, it's probably needed. There are just, maybe too many companies chasing the same thing right now.
But short term.
Short term, everyone's capacity constrained, Google, Microsoft, they can't build fast enough, which means demand spills over. It spreads out to other vendors, which is actually, good for the ecosystem overall, helps more players.
Interesting. So constraint can actually foster diversity, for a while anyway.
Yeah.
But not everyone's riding this wave equally, right?
Yeah.
You mentioned weaker plays. What about IBM? Their CEO sounded optimistic about the economy, but IBM itself?
Yeah, IBM, not a phenomenal quarter for them, despite their CEO upgrading his economic outlook.
What went wrong?
Well, their software business slowed down, decelerated, and the stock took a hit, pulled back quite a bit.
Oh.
At one point, it was trading at a valuation multiple similar to Microsoft, which is, well, a bit strange.
Why strong?
Because IBM is, a single-digit grower. Microsoft is solidly double-digit. Very different trajectories right now.
So what's IBM's focus then?
Their plan seems more geared towards M&A and consulting, looking out towards 2026, maybe less direct play in this immediate infrastructure race.
Got it. Okay, let's shift gears from companies to government strategy. Washington, D.C. has this AI action plan. What's the main thrust there?
A big part of it, maybe surprisingly, is focused on deregulation and expedited permitting.
Deregulation. for AI.
Yeah, the idea is to speed things up, help the whole industry, make M&A easier, help the build-out we were just talking about.
And protect the U.S. position.
Exactly, protect the U.S. lead, basically. And an interesting observation from that D.C. donut was that AI seems to be consolidating power for many, not just, one or two giants.
That sounds positive for the ecosystem.
Yeah, potentially quite positive, spreading the benefits a bit wider.
You mentioned the DC event. I heard something interesting that there were basically no software people on stage. It was all about energy, chips, deregulation. Is that right?
That observation was definitely made. The focus was very much on the physical side of things.
Why? Why such a heavy focus on the hardware and energy side?
Because, well, for true AI, the kind everyone's aiming for, you need massive amounts of energy. You need cutting-edge chips. You need land for data centers. You need serious hardware capability.
But it ties into rebuilding manufacturing, stuff the U.S. may be offshored.
Precisely. It aligns with this broader push to reindustrialize, to bring some of that capability back on shore, especially for critical tech like AI.
Are we actually seeing this happen? Money flowing into manufacturing?
We are. Private capital is backing defense startups, for example, to expand manufacturing here.
Like who?
Well, Endural. They're putting over $1 billion into a new facility in Ohio. It's called Article 1.
$1 billion.
And another company, Saronic, they're looking at investing maybe $2.7 billion into projects like Port Alpha.
Port Alpha? What's that?
It's envisioned as a modern software-defined shipyard. The goal, to build masses of autonomous ships.
Wow. Autonomous ships. And I heard General Catalyst is involved somehow. Connecting startups and government.
Yeah, they seem to be playing a connector role, linking these defense and industrial startups with, government agencies, the White House, Congress, trying to cut the red tape, basically.
Making things happen faster. A very hands-on approach.
Seems like it.
Okay, let's zoom back into specific companies again, because this is where these big trends hit the road, right? Intel. Their stock dropped, over 9%? After the CEO talked about cost-cutting. That doesn't sound great for innovation.
No, it wasn't perceived well. The focus on cost-cutting rather than product or innovation seemed to spook investors.
And are they actually cutting back?
They're retreating from building ahead of demand. They're delaying projects, that big Keystone project of Ohio. Delayed again, maybe to 2030 now.
2030, wow.
Yeah, and other facilities in Germany and Poland are delayed too.
What's the risk there?
Well, it raises real concerns about U.S. indigenous semiconductor leading-edge capability. Our ability to make the most advanced chips here if Intel doesn't push forward with their next-gen tech, the 14A process.
And you mentioned they weren't even at that DCAI event.
Correct. Neither Intel nor Alphabet, actually, which, says something about who's seen as leading the charge right now.
Okay, switching gears dramatically. Tesla. This is where it gets really interesting, maybe a bit wild. Robotaxis. Launching in San Francisco. But, wait for it, they come with a driver in the driver's seat.
Chuckle slightly. Yeah, that's the catch, isn't it? It's classic framing.
So what's the reality? Can they actually run driverless cars there?
No. The key thing is Tesla doesn't have the California permits for truly driverless operation. Unlike, say, Waymo, they've got 1,500 cars running driverlessly in 5 cities now.
1,500, okay. So Tesla's using something else.
Yeah, they're using what's called a TCP permit, Transportation Charter Party. It's basically a license for a charter service, like a limo service.
Which requires a driver.
Which absolutely requires a human driver. So calling it a robotaxi is, blurring the lines quite a bit.
And Elon Musk's goal? Half of Americans using robotaxis by late 2025? How's that looking?
Seems optimistic. Let's put it that way.
Yeah.
Based on the current reality, maybe 11 or so cars in Austin that even have a safety observer getting to half of America in, year and a bit? Seems like a very long shot.
A very long shot indeed. Okay, what about Optimus, the humanoid robot?
Ah, yes, Optimus.
Musk claimed back in March they hope to make 5,000 of them this year, a Roman legion of robots.
Size slightly? Yeah, the Roman legion claim. Reports suggest they are nowhere near 5,000.
Really? What's the holdup?
There's apparently real difficulty manufacturing the parts, especially the hands, very complex.
So how many do they have, roughly?
Estimates are more like maybe 50, something like 50 Optimus bots walking around in the factory, picking things up, putting them down.
But not doing actual factory work yet?
Not doing actual work in the sense of replacing human jobs on the line, no. Not yet.
So, this robotaxi launch timing may be a distraction.
You do have to wonder if it's partly about trying to, get investors excited about something while these other really ambitious futuristic projects are maybe running a bit behind schedule.
Makes sense strategically, perhaps. Okay, let's widen the lens again. Regulation. It feels like the US and the EU are going in totally different directions with big tech.
They really are. There's definitely growing friction and combat, as some put it, between EU regulators and big tech companies,
Compared to the US.
compared to what seems like a generally much more friendly regulatory environment in the US right now, at least on some fronts.
Can you give an example?
Sure. Look at Meta and political ads in the EU. Meta's stopping sales of political ads there by October,
Wow.
because new EU rules make it super difficult to target those ads effectively without getting explicit permission directly from the user for that specific data use.
And it's not worth it for Meta.
Apparently not. Political ads aren't a huge moneymaker for them globally, so as they say, the juice is not worth the squeeze.
Has anyone else done this?
Yeah, Google already pulled back from political ads in the EU, so Meta's following suit.
Okay, what else? Age verification seems like another battleground.
Absolutely. Big clash there. Meta is arguing with the app stores, Apple, Google, about who's fundamentally responsible for checking ages to protect kids online.
What's Meta's argument?
Meta saying the app stores are better positioned. Their analogy is like, the app store is the liquor store. They should be checking the ID before letting someone in or download the app.
And Apple and Google say.
They see Meta as just the mall. Meta is the shop inside the mall. It's their responsibility to check their own customers.
Interesting analogies.
Yeah.
Where's this heading?
Well, more laws are trying to hold platforms like Meta more accountable, but
Okay.
Meta's actually had some success convincing, I think, 3 states now to pass laws closer to their vision. So it's a big pivot in the conversation, even if a lot of these laws end up tied up in court.
Fascinating. So the bottom line is the US and EU are on two very different paths with tech rules.
It seems that way. And getting more dramatically different by the month, arguably.
Okay, let's bring it back to a specific company navigating all this.
Mm-hmm.
Samsung. How are they playing their cards in this changing world? They seem really focused on foldables.
They are. They're really pushing innovation in the consumer space with foldables, the category they essentially created. And they even say they welcome competition, like from Apple, if they eventually enter.
What's their advantage?
Their huge strength is that end-to-end supply chain. They control everything from the components all the way to the devices and applications and services.
And manufacturing. We talked about reshoring.
Samsung has incredible manufacturing flexibility. They've got factories in key spots all over the world, Vietnam, Korea, India, for example.
So they can adapt to things like tariffs.
Exactly. If, say, a big 25% tariff hits Samsung phones not made in the U.S., they have options. They're already working to optimize production based on potential trade policies. That's real resilience.
Smart. What about AI on their phones? Are they picking one AI to rule them all?
No, quite the opposite. They've integrated Google's Gemini into Galaxy phones, yes.
Okay.
But they're explicitly open to integrating multiple AI systems agents. They even mention Perplexity AI as a possible future partner for, say, the S26.
Interesting. So choice for the consumer.
That seems to be the goal. Give users multiple choices for AI, not lock them in. And they're big on localization, too, like partnering with local AI vendors in China.
Makes sense.
Yeah.
Now, some say the smartphone market is dead, saturated. What's Samsung's view? Is the phone finished?
Not according to Samsung. They push back hard on that. They believe the market will continue to increase, continue to grow,
Wow.
because of the synergy with all the other connected devices, watches, earbuds, tablets, PCs, the Echo devices. They all work together.
And AI's role.
Crucially, they see AI making the smartphone more important, not less. It becomes the central hub role for managing all your AI interactions and connected devices.
So the phone's not dead, it's just evolving into the AI command center.
That's the vision. More indispensable than ever.
Wow. Okay, we've covered a ton of ground there. From that huge AI infrastructure build-out, the whole manufacturing shift to those wild Tesla claims, the regulatory split.
Yeah, it's a lot happening all at once.
It really makes you think, doesn't it?
Yeah.
How all these massive global trends might actually change the tech you use every day, or maybe even the job market, the whole world.
Absolutely. And maybe a final thought for everyone listening. As AI keeps accelerating, as hardware and software lines blur, as we figure out what driverless even means, how are you going to navigate it all?
Yeah.
What questions does all this raise for you about the technology you rely on? Worth pondering.
Definitely something to think about. Well, thanks for tuning in to Byte-Sized Tech. If you enjoyed the episode, please like, comment, share, and subscribe for more fun tech discussions.